Well, welcome back, everyone. Exciting markets indeed. Season's greetings to you and yours. Looking forward to sharing some insights with you in this video. If you've been following videos just like these over the last several days and or even attended our special educational session earlier in the week, well, you would have seen me bring out a powerful but simple to understand toolkit to help us understand market direction and the probabilities associated with that. And from there, ideas. We know that we are in a marketplace when we look at a weekly chart using the TRP indicative toolkit overlaid on that weekly chart. Very simple to understand. Buy signal, cyan dot under the candle. It's a sell when it's above. Underneath in the subchart, we've got that TRP momentum crossover toolkit. Again, TRP toolkit built by Rob Hoffman, 32-time international domestic trading champion, on-site real money competitions. And he's the only one that we know of that has achieved that. This toolkit has been built over decades and, of course, has been simplified and distilled down to easy to understand signals with, of course, a little edge there for you where we've got that cyan dot buy. Now, that happened back over there. That was November, the 6th week. We've obviously gone up from there. We've got a target 1. But when that buy signal appeared, it appeared with the momentum crossover dot at the center to slightly above that momentum crossover channel. That's great. Now, we were coming from already above, already using up most of our bullish momentum. So this is a continuation move after consolidation, effectively, on that kind of a time frame. But what we're really interested in now is after what happened yesterday with the Fed, where the bond market had already priced in cuts and the Fed moved closer to that, effectively rubber stamping that rates are going to go down next year. It's about when and how much, and I think that Powell is going to be as data dependent as he always is. If we see a crisis, well, they'll make a move sooner. If not, probably not in Q1, maybe the tail end, but Q2, very likely, of 24. Now, what I'm going to really distill down is we've got that amazing move up in the market. We've got open targets on the weekly, but the weekly chart throws its signal out a month to a quarter. The daily chart has got a midline target that was largely achieved today. When we take a look at the open target 2, very similar number, and the daily chart throws its signal out a week to 2 or more. We can tell very clearly, though, that we have used up a lot of bullish momentum. It hasn't quit, but we're not starting at the beginning here, which would be close to the bottom. We are in a spot where it's very stretched, needless to say. Now, the 4-hour chart really takes care of the 3 to 5 day time frame. And we know that we have had a high probability signal, as we discussed in our live sessions earlier this week. We continued on our way up. We've had that midline target break and be met yesterday. And then we had the target 2 met today in market. Now, we still have positive momentum. We haven't crossed back down over here, but the risk of crossing back down is growing based on what we're seeing on the hourly chart. Now, as I record this video for you into the end of the day, it's still a little well before actually the close. It's about an hour and a half before the close. I want you to know that the hourly chart's already given us something that says, watch out. But if I go back in time and I take a look at this setup using the TRP toolkit, we can dip, bounce, and we can actually make a higher high that's likely negatively divergent before the market quits. So what I want you to really zone in on is no matter how stretched the market is, no matter how much it seems fragile and is likely to fall apart, do we have sell signals that we can utilize on a hour-to-hour, day-over-day basis? The answer on the 1 hour, 4-hour chart is no. We are still operating off of buy signals. We're still in a runaway breakout on the hourly chart. Now, that is power. It can prevent mistakes like trying to get bearish in a market that is still not done clearly its bullish move. Now, what I want to help do is broaden and deepen out the insights I provided in the live session I did Wednesday. And by popular demand, folks have asked me to do it again. So I'm going to be doing a session similar to what you saw on Wednesday for both day and swing traders with updated insights and ideas. And of course, a synopsis of how we close the week and where we're going to be going next week. All of that and much, much more is going to happen this Saturday. I want to share my insights with you. outlook and ideas, and I'm going to do so starting at 10 a.m. Eastern Time this Saturday, December the 16th. It's a great time to have powerful insights, powerful tools on your side, and have a cool level head to apply and approach the market into the end of the year and the beginning of 2024. I hope to see you at the session on Saturday, and I wish you a wonderful, wonderful rest of your day today, and thanks for watching. Bye for now.